G'day ladies and gentlemen, thanks for joining me in this individual trade analysis class which I'm going to present you with. What I'm going to do is start with Berkshire Hathaway over here, and then we'll make our way down the list all the way down to Target. There's approximately 15 symbols which we're going to make our way through. I'll try and provide you with an entry, a target, and a stop for each and every one of these individual trades. If there's no compelling trade set up, we'll just skip it and we'll move on to the following share. So what I'll do for you, I'll begin with Berkshire Hathaway, and this one has actually already been done. You can see my screen at the moment, obviously. I've got an entry here at 128.42. There's only one direction I want to trade Berkshire Hathaway at the moment, and that direction is bullish. The reason why is the fact that we've broken out above this large term accumulation or distribution phase. At the end of the day, it's what we call the consolidation phase, and the trend at the moment is bullish. You can see if I zoom in on the detail, the exponential moving averages are really showcasing that. You can see that we came down and we tested the 10, the 20, and the 50. That was what we call the retracement or the rest we needed. Now we're starting to bounce higher. So I've got this little 128.42. This is what we could also call a little stair-step pattern. And it's what we judge and classify as a short-term continuation pattern in the direction of the trend. So 128.42 is a really nice bullish entry on Berkshire Hathaway. Very, very nice entry. Now we'll move on to CHK. That's Chesapeake Energy Corporation. At the moment, you can see we have what we call a 3-day candlestick pattern. It's what we call an evening star reversal pattern. Now this is quite bearish. It's happening at the right location at this resistance level right around $28.80. However, the thing is that we've got a bullish exponential moving average cross, which is indicating the potential for a new trend breakout. So we've got some conflicting analysis. What I need to see is a continuation above 29.65. Now, although that goes against this 3-day candlestick pattern, I do not expect it to be triggered this week. The reason why is because I do believe we will come down and we'll just flatline around this resistance level, which is going to act as new support, about $28.80. We could come down and test the 10 or even the 20 exponential moving averages, but please expect a bounce, and that bounce is going to occur around this pivot point here, moving us into the trade at about $29.65. That is a trade in progress. We're not there at the moment. Here's CNX from last week. If you followed our trade analysis videos from last week, CNX was a bullish trade setup, which we spoke about at $42.17. Had a really, really nice breakout right here. And as of Friday, we have an inside day, and it's what we call a spinning top candlestick pattern. So we do have the beginning of a potential breakout. The thing is that we have earnings coming out on Tuesday. So please exit this trade before Tuesday if you are in it. If you're not in it yet, leave it, because earnings, of course, is coming out. You can't be getting into trades when earnings are about to be released, because, of course, the market is either going to gap with you or gap against you. It's a risk that you do not want to undertake and have in your own trading account. So CNX, I will do an update during the week on that individual trade, but at the moment, there is no compelling signal to trade either bullish or bearish. CSIQ, as you can see, we have that bearish exponential moving average cross, and we're starting to set up a series of lower highs and also lower lows as we progress lower. The thing is at the moment is that we are getting bullish candlesticks, but we are very close to a resistance level and also a declining 50 exponential moving average. So this trade is really, really simple. All I need to see on CSIQ is a move below 2601 bearishly. I'm just going to make this dotted line thin. A bearish setup below 2601 to trade in the direction of the current trend, which is lower. My target on CSIQ, if in fact that does trigger, is $22.57. So that's the trade setup on CSIQ. No bullish trade setup this week. DE. Now, this has been a stellar trade for us over the past few weeks and months. We had a 89.48 bullish entry that, of course, triggered. And as you can see, the direction of the trend is up. We've broken above one resistance level. We've hit a second. At the moment, we're right in the middle. So this is a very, very simple trade setup. We've got a 95.22 bullish continuation above resistance. What I can do also is move this down to about $90.35. That will give us the bearish opportunity on the downside. So 90.35 bearish, 95.22 on DE. FSLR, very interesting trade setup. This is something which we spoke about 2 weeks ago. I said 75.30 will be entering into this bullish. If we get a clear closing continuation below 66.48, it'll be a quick trade down to support. This did happen, and it did happen about 2 weeks ago on the lower wick of this candlestick. This wick is telling us that there are buyers right around this location. So again, FSLR, you need to hold and keep that bullish perspective until we break down below 62.84. So this is what we call a bidirectional trade setup. We're right in the middle. This can go either one of two ways, and at the moment it's not really compelling either direction. There are better trades out there, such as Garmin. Now Garmin we've had on our list for 2 weeks now, and it's starting to break down. You can see that right now. Initial entry 54.81 looks to be confirming as we speak. One problem, 50 exponential moving average. This generally holds as support and we get a bounce. So with Garmin, if you're in the trade, it's profitable. Congratulations, tighten your stop, exit out of it before earnings, which is coming out on the 30th of April. Now that, according to my estimate, is a Wednesday. Either Wednesday before market, Wednesday during market hours, Wednesday after market. Let me just close that. That was just another video rendering. So please be cautious. Exit the trade before we get to earnings. Other than that, ladies and gentlemen, it looks like a stellar trade on the bearish side. No bullish trade on Garmin. The market is looking quite weak. Ticker symbol LLY. This gave us a little bit of a whipsaw last week. That's fine. We did exit on this bearish Marubozu candlestick for, I think, a 10-cent loss. Absolutely nothing. What we are actually establishing at the moment is a triple top. And by the way, you wouldn't have been triggered into this trade because of earnings. So that wouldn't have even been a loss. That 10 cent is a theoretical virtual loss. Now, what I can say on LLY is we are getting a bearish reversal. We are getting a bearish reversal, and the reversal is taking place right now as we speak. The best entry for LLY is below the 50 exponential moving average, below the support, and below the swing low, which occurred in March 2014. So 56.68 is the bearish trigger for LLY this week. If this triggers, we're filling the gap at about $55 a share, then we're coming down to $53 a share on the bearish side. So there's a lot of bearish opportunity on LLY. What we have next is LinkedIn. Pardon me, I don't know what happened just then. The screen went white. But LinkedIn also is absolutely tanking. The thing is, we have earnings also coming up. So please do not force a trade on LinkedIn. We have earnings. The earnings is just around the corner. Here's Oracle. Let's move into Oracle instead. Oracle is very, very nice. It's at a pivot point at 39.45. We're making a series of lower highs, which is interesting. We still have the same relative lows. So I've got a trigger here at 38.88, also a trigger at $40.70. Either way this share decides to move, I'm jumping on the bandwagon. We're going to break the 50. What's actually happening is that decisions are being made by traders trading Oracle right now. We're at an old resistance level, which is now acting as support. We're sitting on that 50. We're sitting on this very important pivot point. This is either going to bounce and continue higher or break down and trade down to 38.10, then down to $37, and then down to $36. So I'm very excited about Oracle. This is something that I'll keep you updated with during the week, but you can see the basic trade opportunities and the triggers on my screen. Here's Pepsi. Now, Pepsi, is another trade which I'm excited about. Earnings gap was here somewhere. Let me just get this into perspective, was here. And we had this trade set up at $86.18 for the continuation above. What we have at the moment is 5 continuous days sideways, setting up either a flag or a stair-step continuation breakout. Declining volume, interesting, and we are holding those exponential moving averages. We could also have what we call a pennant pattern. So if we want to trade this, we want to trade this in the direction of the trend. That, of course, is bullish because we're moving higher. So $86.18 on Pepsi is a really stellar trade opportunity. In the way of a bearish trade opportunity, it's a little bit hard to place because of these rising exponential moving averages. It's telling us that the trend is higher, and you don't necessarily want to be fighting a bullish trend, do you? So that is Pepsi. Let's move on to Solar City. Solar City has been absolutely stellar for us. We've caught breakdowns upon breakdown. At the moment, this 55.74 was a trigger from over here where we hit our target days later just here. What we have right now, again, is let me just get it up on my screen, a bearish pullback and a continuation below the 10 and the 20 exponential moving average. The thing is though, we have earnings coming up and we've already moved quite a long way on Solar City. So I'm more inclined to just sit back, say, hey, it's provided us with some nice profits. I'm going to wait until earnings is done and finished until I look at Solar City to trade again. So let's have a look at SEE. This is Sealed Air Corporation. This one has been in some weird gyrations or oscillations higher and lower. The thing is that we have earnings again. So unfortunately, there's no trade on SEE this week. Soda has had some incredible volume flow into it. incredible volume. One day we were up 10%. The next day we were down, I think, 6%. The following day we were almost at a break even or net gain for the day. So this is a really simple trade opportunity. If we break above 47.79, trade SOTA bullish. If we break down below 37.16, trade it bearish down to support at $29 a share. Huge profit potential. I mean, 47 up to 52 is over 10%. 37 down to 34 is over 10%. So we've got a 10% trade either direction on SOTA. Let's have a look at Target. Now, Target again is just inkling into these old resistance highs or these old swing highs. Now, you don't want to be caught trading into the face of such an important resistance level. So what I'm more inclined to do is move this bearish trade up here at 59.67, trading down to support at $58.80. So this is the trade on Target. Whether it triggers or not this week is another question. There is no bullish trade set up on Target. That is our first watch list done for the week. Thank you so much for watching this video. If you want to learn how to do this for yourself, come to pivotpoint-trading.com and learn the vital foundations for successful, profitable, autonomous trading. All the best, everyone. Goodbye.